Julia Lee joins us from Bell Direct. Julia, good to talk to you, but the Aussie market, after starting out so well, only just managed to finish in the black.
It's become a bit of a trend with the Australian market starting off quite well in the morning but giving back the gains in the afternoon, and we certainly saw that same trend today. We saw a positive lead from Wall Street and commodity prices, which helped our market up higher on the open, but then for the rest of the day we just lost ground, and by the end of the day we only managed marginal gains of just 0.1%. If we have a look at some of the positives first on the market, we did see the energy sector up by 1.9%. It was the best performing sector, and that was on the back of a jump in oil prices overnight. We saw the oil inventory report out of the US, and it showed a surprise drop in inventories, falling by the most in 15 months. So that was a positive for that particular sector. We also saw Amco come back online, and its stock jumped by almost 8%. It of course did the institutional part of its capital raising, which was well received, and it actually raised a little bit more than what the market anticipated. On the downside though, we did see the defensives being sold off. So the worst sectors and the sectors that lost ground were the consumer staples, the healthcare sector, the utility sector, as well as the telecom sector. Earnings very much in the spotlight, mostly having a positive effect. I guess the biggest one that had the negative effect was Wesfarmers, but otherwise we saw Brambles up by 3.6% after its result. We saw QBE Insurance up by 6.4% after its result. We also saw AMP up by almost 3%, and we saw Downer EDI up by about 10% today. So altogether, the market pretty flat and giving back a lot of those gains from the morning.
Of course, the big news, Rio Tinto coming out with its first half numbers. What did you make of the results?
Well, these numbers have just come out. So Rio Tinto has come out after the bell with its numbers. Now, the market consensus was for an expectation for an underlying profit result of $2.67 billion. Now, they've come in just under that at $2.57 billion. So pretty much in line with consensus, just missing it by a little bit. If we have a look, Rio Tinto has been under pressure because of that huge tumble that we've seen in commodity prices. In fact, the effect of those falling commodity prices has been to hit earnings by $4.67 billion. So a huge impact there. And of course, the difference, I guess, in Rio Tinto's earnings and BHP Billiton's earnings, the main one is that Rio Tinto is very highly geared. And you can see that when you see the size of the decrease that they've seen in earnings. And I guess that's what happens when you borrow. When the market's rising, it actually adds to your earnings. But when the market is falling, it takes away even more from your earnings. So while we saw BHP Billiton saying that EBIT was actually down by 25%, we've actually seen Rio Tinto come out with around about double that. Rio Tinto saying that EBIT was down by 54%. And while we saw BHP Billiton saying EBITDA was down by about 20%, Rio Tinto has come out to say that EBITDA is down by about 47%. So that gearing effect very clearly seen throughout the two results. Now, Rio Tinto has said that its net debt has decreased by $14.8 billion. We know the aluminium assets were a problem. They were flagged in the second quarter production report as well, saying that they're planning to have 12% of their smelting capacity either idle, divested, or shut down by the end of 2009. So a little bit of an update there. The results have just come out, so it's going to take a while to go through all the numbers, but just a very short summary. Looks like pretty much in line with expectations. If anything, it's missed by a little bit. The market's going to be looking towards that commentary, so that conference call later on.
Julia, do really appreciate you bringing us across all those numbers, as you say, coming out after market close. Just another important stock to ask you about, Wesfarmers. Market didn't seem to like its report or its outlook more today.
I mean, Wesfarmers, the full year announcement, we saw an increase of 40% and that was up to $1.5 billion. That was just a little bit below what we were expecting. We were expecting $1.7 billion, but the market really selling off on the outlook, which remains still uncertain. If we have a look at Wesfarmers' share price for the year, it's been doing fairly well in 2009 so far, but you can see a possible double top forming there, so we could see a pullback in the next few sessions. Certainly the market didn't like the news of its full year result. If I move to the side here, you can see that the result came out early on in the session, and as soon as the result came out, we did see a sell down in its shares. So the market really not too happy with that outlook. The shares down by about 4% today.
Julia Lee, Bell Direct, great to get that update. Thank you so much for speaking with us.
Thanks, Bridie.